Failure is simply the opportunity to begin again, this time more intelligently. Henry Ford. My friends, we see everything down on this Friday. Now, again, overall, the week was an up week for stocks, up week for gold, down week for bonds. But let's look at what happened on Friday as we finish the week up with our weekly review and forecast. First, we're going to look overall at the weekly view. We can see we have a green up candle, a higher high during this week, price percent oscillator over the last 3 weeks now, losing some of that momentum it had coming into December. Price percent oscillator, again, flattening, derivative oscillator gaining momentum. So we go to the 2-day, and again, this is just the first day of the latest 2-day candle. It will finish drawing on Monday because of the down movement. Again, the S&P down 0.60% for the day. We have a red spinning top. Prices above the 2-day trend line. This is the first half, the first day of a 2-day. Look at it moving down, getting close to crossing over. Won't know that until the 2-day candle closes on Monday. But again, it's been trying to push its way forward. When that happens, of course, that would be your signal to pull that trade if you haven't already taken your profit. We look at the half-day chart. We can see with the derivative oscillator losing momentum, the price percent oscillator also moving down. Now again, down in the morning, further down in the afternoon, piercing the 2-day trend line, not the weekly, finishing above the 2-day. And again, trying to, did it cross over at the end of the day? No, look at that, 0.47, 0.47. If you look on the left-hand side of the screen, under PPO and EAVG, that's exponential moving average 8 period, and the price percent oscillator, it's below that first horizontal line. So we will keep our eyes out as we move into the next week to see what stocks are going to do as we move closer and closer to the end of the year. Now let's look at the Qs. How did the Qs finish? Well, we look at the price percent oscillator and we see that the PPO managed to cross over at the end of the week, although again, very weakly. It is a higher high and a bigger up candle, or a candle actually higher than the prior week. Derivative oscillator also gaining upward momentum, so you had the possibility of jumping in on a weekly vertical crossover. It has been a while. We will go ahead and move that over and officially anoint the weekly vertical crossover. Now, if the week starts off and it's very, very weak, it could, of course, pull back through that, being as weak as a crossover as it is. But again, we'll go ahead and mark it as such. It did occur. It did happen. And of course, we will note that. We'll also go ahead and redraw the trend and get that set up for you. So we did have a weekly vertical crossover. No harm practice trading it. Again, note why you're doing it or note why you're not doing it in your notes. Now, when we look at the 2-day chart, we see that it is flat on the price percent oscillator, derivative oscillator losing momentum. And of course, as we look at and measure where we are, as far as the high goes, 311.98, the prior high, 311.24. So we did reach a higher high so far, first day of this latest 2-day candle, and we are above the 2-day trend line. So that is good to see. That's good to see. And we go to the half-day chart. We see things up in the morning, and then that's where things blasted over, going down in the afternoon, getting quite low on that wick. And again, that price percent oscillator is still positive, but a little less than flat derivative oscillator losing momentum. So again, that's where we are on the Qs. If you jumped into that trade, just be very careful. Hope you went ahead and set your profit and loss bands. And in fact, I'll put at the end of today's video the profit and loss band training. Very important that you understand profit and loss bands, how to use them, how to utilize them, what they are there for. So profit and loss bands is going to be a special training I'll put at the end of today's program for you. Now, we're going to go from the Qs, leave stocks, Go to bonds. What are bonds doing? Bonds were down for the day again, 0.29%. We have a red spinning top for the week. We see the price percent oscillator heading down, derivative oscillator a little less than flat. So moving up a little bit there. But again, overall price movement is down. Didn't reach a lower low anywhere near where it reached back on the week ending the 4th of December. Go to the 2-day chart. What do we see there? Well, the first day of the latest 2-day candle is a red down candle. No wick on the top like the prior one. Derivative oscillator gaining momentum, trying to cross over going down. Now, that is a potential 2-day recross at the close of the market on Monday, so pay attention. Might give you an opportunity to short TLT in a practice trade. Look at the half-day chart. What do we see there? It's continuing to gain momentum, up a little in the morning, well, slowing down in the down movement in the morning, and then much more resumption in the afternoon. That is where we are on bonds. Hope you're noting all this down on your weekly market worksheet. I'm going to put at the end of today's video, in addition to the training on profit and loss bands, how to use your weekly market worksheet, how to fill those out. Those are in your show notes every day. PDFs of the weekly market worksheet, daily worksheet, and trade worksheet. Hope you are filling those out if you want to supercharge your training. Hopefully you're not just listening to the sound of my voice, even though I'm hoping it's pleasant. What do we see on gold? Well, gold finished the week down a little bit on the day on Friday, 0.15%, but overall, it's the first green, well, it's the second green up candle that we have seen, the biggest that we've seen in a while. We see that gold, as far as the price percent oscillator goes, is flat. Derivative oscillator is losing some downward momentum. Again, we are continuing to wait and see if and when gold is going to cross over, going up. We'll have a weekly vertical crossover. Haven't had that yet. We had a 2-day crossover going up back on the 15th. That always precedes a weekly vertical crossover. I mean, that has to happen first. Just because it doesn't mean that it's going to be a weekly vertical crossover. What could happen? The 2-day could roll back over in what we call a recross in the same direction as the weekly, and gives us our second method for jumping into trades, the first being a weekly vertical crossover. So we see the first day of the latest 2-day candle moving up, not reaching the high that it reached on that prior 2-day candle, but moving up the same above the 2-day trend line. Derivative oscillator gaining upward momentum. Price percent oscillator heading up, losing just a little bit so far, first day of that latest 2-day candle. What's going on the half-day or 195-minute chart? We can see where gold peaked in the morning on Thursday and is just sort of sliding sideways since then. Derivative oscillator, again, looks like it's moving up just a little bit, maybe flat. Price percent oscillator losing some momentum too. So we'll continue to watch, keep our eye on gold. I can't wait for that next weekly vertical crossover on gold. I hope that's what's coming next. Not a recross going down, but a weekly vertical crossover going up. I'm going to be ready for it. I know you are too. Folks, that's where we are as we end the day. If you don't have our book, please buy it. Support us here at the channel. Also consider Patreon support. With that Patreon support, guess what you get? Yes, you get the 3-part series, Options Made Simple, The Charting Wealth Way, in addition to joining us on that monthly question and answer live call-in session where we review the stocks and ETFs you're interested in, practice trading, and help you answer your questions about trading and training. God bless. All the best from the whole team at Charting Wealth World Headquarters.